Hi everyone, let's take a look at exercise 10-8, which deals with journal entries relating to bonds. On September 1st, 2007, Chardon Corporation issued 300,000 8% 10-year bonds at face value. Interest is payable annually on September 1st. Chardon's year end is December 31st. Okay, let's look at what we're required to do. First, on Part A, let's prepare or record the issuance of the bonds. So this takes place on 9/1/2007. Why don't we left justify those? We'll format this into commas with no pennies. Okay, well, we issue the bonds for 300,000. So we're doing the easy part first. We have a debit of cash, 300,000, and we have a credit to bonds payable, right, of that same 300,000. And really we should put some reason as to what occurred. We would say issuance of bonds at face value. Some kind of description that makes sense for why we recorded the entry. Okay, then let's take a look at Part B. Part B says, record the accrual of interest on December 31st, 2007. Okay, well, we know that's the date, and we know we need to record the bond interest expense, right? And the offset, of course, is bonds payable, since we're only recording the accrual for, what is this, September, October, November, December, 4 months. Okay? Okay, so we will indent that. And then I'll also indent one other. Alright, so how do we come up with the bond interest expense? Alright, I'm going to put the formula right in cell D18 so you can watch how we calculate this. We would take the bond premium, right? Excuse me, wrong words there. We would take the bond principal, the 300,000, times the stated value of the bonds, 8%, and then we need to take it for 4 months, or 4/12. Okay, so that would get 8,000. We only need to do the calculation once, and this would be to record accrual of interest for 2007. Okay, and let's see. Then we move on to Part C. Part C says record the payment of interest on September 1st, 2008. Okay, so we got 9/1/2008. Now, the easy part is we know we're going to credit cash. Okay, do we know how much? I think we do. I think if we take the 300,000, the face value, times the 8%, and it's 1 year. So we could take it times 12/12, which is 1, or just leave it off. So I'll leave it off. It's a full year, 24,000. Okay, but we've already recorded 4 months of bond interest expense. So now we could either force this number, right? We could take the 24,000 less the 8,000, or we could compute it, and I'll choose to compute it. 300,000 times 8%. We've already recorded 4 months, so that means we've got another 8/12, right? 8 out of 12 months left to record. And once we know that, this should all work out. Now we eliminate the liability we set up at calendar year 2007, and we reduce that, which we've already calculated right there. Okay, and that takes care of Part C, and then we would list the entry as to record the payment of bond interest. Now, if I can spell it right, indent it, and that takes care of this problem. Okay, so the only tricky things we had to do is calculate the interest partial year, 8/12 here, partial year, 4/12 here, and other than that, this problem is pretty straightforward. Thanks, everyone.